Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that are seeing an uptick in hedge fund activity. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at 3 stocks that have seen a positive trend in hedge fund activity, meaning that overall hedge funds holding the stock have increased this past quarter, which can be a very positive indication for the stock. So we're going to take a look at these companies, what it is that they do, and of course, how Wall Street Analysts weigh in on the stock. You can follow along over on TipRanks.com or make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links will be in the description down below. Now let's get right into these 3 stocks. First up, we're taking a look at Everest Group. Their stock trades under the ticker EG, currently priced at $403 per share. They have seen impressive growth of 52% over the past year, including growth of nearly 11% in the last 3 months. They do pay a dividend with a yield of 1.66% and currently score a 10 out of 10 on the TipRanks Smart Score. Everest is an insurance and reinsurance company. Founded back in 1973, their global presence allows them to serve clients in over 100 countries across 6 continents. Providing tailored solutions to meet customers' unique needs, they operate through their subsidiaries and offer a diverse portfolio of products, including property, casualty, specialty, and life reinsurance, as well as insurance coverage. In the last quarter, hedge funds increased their overall holdings of the Everest Group stock by 1 million shares. And that increase in hedge fund activity did include a few new positions, including one sizable position from Viking Global Investment, who has a value reported of nearly $355 million. We saw a couple other new positions from funds, as well as some adding to their existing position, with some small reductions from others and just 2 selling out. Their next earnings report is coming out soon on October 25th, and this follows their last quarter where they came out with record operating income. For their third quarter, analysts will be anticipating earnings per share of $11.25, and that is a big year-over-year increase. The same quarter last year, they saw a loss of over $5 per share. Looking back at their Q2, they did come out with a notable earnings beat. Earnings per share came in at $15.21, well ahead of the $11.80 expected. And like I said, they did see record operating income of $627 million. Their management noted that their second quarter performance was outstanding as they leaned into the hard reinsurance market. They continued to grow premiums while expanding margins, resulting in strong increases in their quarterly underwriting profits, net income, and record operating income. Taking a look at what Wall Street thinks of the Everest stock, they do currently come in with a unanimous strong buy rating. With 7 current buy ratings, the average price target comes in at $445, which would be an upside potential of over 10% from current prices. And some of those are coming in just the last couple of weeks, around 11 to 14% upside. All of these price targets right around that $11, besides one low end at 1%. The second company we're taking a look at is Axon Enterprise. They trade under the ticker AXON, currently priced at nearly $216 per share. This is another one that has seen great growth this past year, climbing 70% during that period and 17% in the last 3 months. They also score a 10 out of 10 on the TipRanks Smart Score. Now, you might recognize Axon more by the company's original name, Taser. Based out of Arizona, Axon is a tech company geared toward the law enforcement and military markets. Their first product was the popular Taser stunning weapon. Back in 2017, they changed their name to Axon to reflect their wider product line. Their catalog now features a variety of devices, from body and car cameras to drones and remote signals, plus a full range of control and monitoring software in addition to their line of Taser energy weapons. Axon also saw their hedge fund activity increase by about 1 million shares in the last quarter. And this increased activity also had some new positions, but the biggest position actually doubled their holdings. That's Sands Capital Management, who increased their value to about $389 million worth of the Axon stock. We had 2 new positions for a small amount here at $11 million as well, and a couple companies reducing, but nobody selling out. With their next earnings report coming up on November 6th, Axon has been experiencing some pretty steady growth recently. You can see that steady climb up in our chart down below here with both earnings and revenue. Now for their upcoming Q3, analysts will be anticipating earnings per share of 76 cents, a slight increase over last year's. And their previous quarter, Q2, that came out in August 8th, they had a notable earnings beat, coming in at $1.11, well ahead of the 62 cents anticipated. The company also raised their future outlook after they saw their revenue grow 31% to $375 million and annual recurring revenue grow 52%. Taking a look at how Wall Street weighs in, the Axon stock does come in as a strong buy with 7 buys and 1 hold. The average price target for the stock is $236, which would be an upside potential of 9%. We can see the most recent ratings down below here in the last couple of weeks, ranging from 8.8 to 11%. On the low end, we do have a hold from a couple months ago at 6.5%, and a couple others right around that 10% mark, which I'm sure we'll see some more updated following that November earnings. And third on our list today is Philip Morris. Their stock trades under the ticker PM, currently priced just above $91 per share. Over the past year, they've seen growth of 13%, but have been cooling off recently, and in the last 3 months are down 5.5%. They do score a 10 out of 10 on the TipRanks Smart Score, and we have another dividend stock with an attractive yield of over 5.5%. Philip Morris is a leader in the tobacco industry. Known for their Marlboro cigarette brand, the company is actually pivoting away from the traditional cigarette and expanding their smokeless tobacco products. Over the past few years, they've invested over $10.5 billion into such products, and they're targeting 50% of their revenue to come from smoke-free products by 2025. Philip Morris has seen quite the increase of hedge fund activity, with overall holdings of their stock increasing by 10 million shares last quarter. So of course, we have some pretty notable activity here, including a big new position. Once again, Viking Global Investments taking up a position worth $884 million, so pretty sizable there. We have a couple other new positions along with a lot of additions, and you can see overall there's some companies with really big investments here. Now, they actually just reported their latest quarterly earnings today, where they did come out with an earnings beat and record revenue despite slightly missing expectations. They've reported earnings per share of $1.67, beating expectations by 5 cents per share, and revenue came in at $9.14 billion, growing nearly 14% year over year. They said that as a result of their strong year-to-date delivery, that they were raising their full-year growth outlook for their adjusted earnings per share. Their stock is currently rated a strong buy with 7 buy ratings and 1 sell. The average price target comes in just shy of $110, which would be an upside potential of about 20% from current prices. Now, we don't have any analysts weighing in today following that earnings report. I'm sure we'll see some update their price targets here soon, but looking back at the last month, we do have a handful. Of course, on the low end, our sell rating with a downside of 6.5%, and the rest ranging around 14-15% to a high end of 33%. So there we have 3 companies, all with some increased hedge fund activity and all actually coming in with a strong buy consensus from Wall Street as well. Let me know your thoughts on these 3 companies, if they were on your radar before and what you think of them. I always appreciate hearing from you guys in the comments. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what Wall Street is up to and providing some insight and entertainment. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.